Greeting plan sponsors and welcome to the next edition of Marquette Associates Retirement Basics. I am Amy O'Connor, consultant, and I will be guiding you through the webinar reviewing best practices for retirement plans investment lineup. Today I will be reviewing the general investment framework, fund lineup, cash and stable value options, target date funds, traditional asset classes, specialty options, and documenting the process. Starting with the investment framework, retirement plans have participant demographics that can be wide sweeping. With that, it is important to consider a tiered approach for investment options, from one that requires a low level of engagement to individual investment options that allow for proactive investors to have the ability to select their own investment and mixes. In the tiered framework, we consider options from target date funds to specialty investment options. On the following slides, we will dive into further detail on each tier. Having a framework for your investment lineup will offer investment options to different participants. In the tiered approach, the goal is for each investor from conservative to aggressive and engaged to less engaged to have options to help them meet their retirement goals. The fund lineup should include money market funds and stable value options for principal protection. Tier 1 funds should offer target date funds to allow investors to have an option that is diversified but also allows participants to be less engaged. Tier 2 should offer core investment options for investors that want to make their own investment decisions regarding exposure for their retirement plan. This will contain traditional bonds and equity investments. Tier 3 will allow for specialty investment options for the advanced investor. Starting with cash and stable value, both cash or money market funds and stable value are designed to preserve capital. This does not mean that there is zero risk associated with money market funds and stable value. However, these investment options are considered the lowest risk options for the plan. Money market funds generally have multiple options available. Following SEC reform, prime money market funds may be required to impose liquidity fees and limit client redemptions if assets fall below a certain threshold. With that, we are seeing more plans offer less risky money market fund options using government and treasury money market funds. In addition to money market funds, most retirement plans offer stable value funds. Stable value funds invest in high quality fixed income that are protected against interest rate volatility. For further information on stable value, watch our video on stable value education. Stepping up in risk and return from principal protection options to Tier 1 assets, target date funds are an all-in-one diversified investment option. Target date funds are based on an estimated year of retirement for a plan participant. A target date fund will automatically adjust equity or risk exposure over time, so as a participant is getting closer to retirement, the fund will move more conservative. In order to ensure each participant has options available to match their retirement date, we would suggest offering multiple target date funds in 5-year increments. For example, a target date fund 2030, 2035, and 2040. There are many options with target date funds, and because of that, we have an entire video on target date funds. For further information, listen to our video, Basics of Target Date Funds. For the proactive investor that wants to make investment decisions within their portfolio, Tier 2 offers traditional asset classes. The investment lineup should offer options within bonds, U.S. equities, and international equities. To meet your fiduciary duties, you will want to consider using multiple managers for each asset class. You can also consider offering different investment styles between core, value, and growth. Most plans are offering both active and passive options to investors today. The framework offered above shows that in each asset class, we suggest offering at least one passive and one active option to investors. However, it is important to not offer too many investment options for investors. Diversification of managers and styles is consistent with fiduciary duties. The last tier to consider is moving away from traditional asset classes and offering specialty options for investors to further diversify their assets and often offer inflation protection. A popular specialty option is REITs. It is important to remember when offering specialty options that these options are offered to a variety of participants with differing levels of investment background. You will want to ensure that specialty investments do not offer undue risk to investors that may add money and not fully understand the investment option. Bringing this all together, having a tiered approach allows you to have a strong investment framework. The tiered approach also allows different investors and participants to have investment options for their desired level of engagement. Tier 1 or target date funds allows for a lower level of engagement. Tier 2 opens up for higher level of engagement and also individual selection of assets. This is the core investments or traditional asset classes between stocks and bonds. Tier 3 offers more diversifying assets for the portfolio and specialty options. Lastly, we round out these options with money market funds and stable value for principal protection. Lastly, as part of best practices for retirement plans, you should consider adopting a formal investment policy. This will protect you against fiduciary risk and include basic standards for selecting and monitoring investments. Thank you for joining us today as we reviewed the investment lineup best practices. We hope you now have a better understanding of what to consider when fulfilling your fiduciary responsibility. I encourage you to contact your consultant if you would like further information on what was presented today. If you enjoyed this video and want to hear more future webcasts, be sure to hit the subscribe button before you go. Additional information can be sent directly to your email by registering for email alerts on the Marquette website. And thanks again for watching.